So one of the real attractions that we find around private equity is because it is such a wide range of geographies and industries and end markets. So we would be investing in a sort of very wide range of businesses, from manufacturing, consumer goods, technology, and so we're not sort of specifically focused on one or two particular areas. So a couple of examples of businesses that we've invested in recently. There is a garden centre business based in Europe, which has been it's a successful business, but it's looking to expand. We've looked at a number of technology companies in areas like financial technology. We've invested in a business in the UK which makes video games. And we've also looked at areas in sort of consumer goods. So one example is it's really a food manufacturing business based in the UK, specialising in Indian foods, which is for those people who spent some time in the UK, they'll know that that's a big part of the sort of culinary diet in the UK, but a really interesting opportunity, not just because of the growth that you see there, but actually the ability to bring together a couple of family businesses to create a much more sort of consolidated operation going forward. So as you can see, quite different businesses, but ones which are not always found within public share markets, and that's where we think the real attraction can be. Like all businesses across the economy, we've seen some sort of mixed outcomes, but in general, we've actually seen our businesses continue to perform very well indeed. One of the reasons why we think that private equity plays such an important role in people's portfolios is because the businesses tend to react very quickly to changes in economic circumstances or changes in market conditions. And we saw that back in the GFC in 2008 and 2009, with sort of businesses adapting very, very quickly to change circumstances. And we've seen exactly the same thing occur in the last several months, as you've seen the impact of the pandemic sort of flow through to different parts of the economy. So you have seen businesses look to adapt their operations. Some parts of businesses have been significantly reduced, whereas we've seen others which have seen a significant uplift in the type of business that they do, their operations, and their end markets. So if I take, for example, the garden centre business that I talked about a little bit earlier, obviously as shutdowns were put in place by various sort of governments, that business faced some pretty significant short-term challenges. But actually what has happened since markets have started to reopen is that business has rebounded incredibly strongly. And it's actually operating at about 30% ahead of where it was 12 months ago. Now, part of that has probably been a little bit of pent-up demand. It's been a very good summer in the Northern Hemisphere, but it's also down to the management team taking the time when they were locked down to really reassess the type of business that this could be once the garden centres opened up again. And that's very much sort of driven not only sort of strong revenues, but they've adjusted the cost base, and so the profitability of the business is actually significantly ahead of where it was 12 or 18 months ago.